Hey, welcome to Tax Tip Tuesday. Hope y'all are having an amazing day. I'm Chastity Grady. I'm the owner of Grady Tax Plus. And every week since June, I've been going live talking about business, talking about taxes, and talking about bookkeeping. And this is the last week of the year, and so I just want to go ahead and give the highlights of not everything, but some of the most important things that I want you to take away this year that I talked about on my page. Just some key takeaways to take away for 2022 to start you off in 2023, and I'm gonna let you know what's to come. Okay, so like I said, ever since June, I've been going live every week doing Tax Tip Tuesdays and talking about the business, taxes, and bookkeeping. So I'm just going to go ahead and give you a brief overview so that you can kind of, know where to go from here, okay? And if you have questions, definitely leave me a comment and I'll be happy to answer the question, okay? So I don't want to keep y'all too long, so I'm just going to go ahead and jump right in because it's a lot to cover that I've talked about over the past 6 months, all right? So the first thing I talked about this year was business, starting a business, okay? 2020, I feel like 2022 was the year of starting businesses, especially in 2021. But I feel like in 2022, people are really trying to come into their own and start their business, trying to understand what business they wanted to start and everything like that, and not knowing whether they should, file an LLC or, stay a sole proprietor or get a DBA, what a DBA is, okay? So I started the year off talking about a DBA versus an LLC, okay? Which is they are two of the main types of businesses that people look at when they try to start a business, okay? And so when you want to look at a DBA, you have to look at, the name itself, doing business as. So you're really saying, I'm Chastity Grady, doing business as whatever name you come up with, okay? So it only gives you the rights to use that name in that particular county that you're living in, okay? So when you look at structure-wise, there's really no structure to it. You're just given a name, okay? Yeah, there's some perks with, having your own name that you can use. You can get a business account with that DBA name. You can get an EIN with that DBA, but it really stops there. There's nothing really else that you can do. And so LLCs have been hot on the market this year. And when you look at LLCs, the main thing with the LLC is, or PLLC, for the type of clients that I work with, you want to look at whether or not you want your business to be separate from your personal assets, okay? Separating the business and personal assets. And so if that is something that's important to you, if you were ever to get sued, there are a lot of businesses that are high risk to be sued, and so a LLC or a PLLC is a must, okay? It really is a must. For example, being in accounting, the clients I work with are, licensed counselors. That's a high risk, of being sued, for malpractice or something where it's to happen to that client or anything like that. So when you look at an LLC, that's really for, your legal protection, protecting your assets, your personal assets from your business assets. So that's the main difference, okay? And so also I talked about once you get that, obtaining your EIN for your business name, getting a business bank account, and there are other steps that you should take after you form your business. But the main thing is when you started the business, getting the EIN in that business bank account, okay? Now, when you're operating your business, you want to look at, keeping everything, once you are a business, whether or not you get an LLC or a DBA or not, you want to make sure that you keep everything separate from each other, separate from your personal accounts, okay? Don't have a stream of income coming into your personal account and then the rest going into a business account, and then using your business account to buy some expenses, but then having them taken out of your personal account. Don't do that. That's commingling. It's a whole lot of work to do on the back end to get all of that clean from a bookkeeping standpoint. So you want to make sure that once you get your business bank account, you go ahead and have everything that's meant for the business. And my kid is here because school is out, so ignore him. Everything that's meant for the business, have it come out of the business account, the income account, and the expense account. Have it coming out of those things, okay, to keep everything clean. That helps you if in case of a lawsuit, that's for you to be able to approve. One of the things you to be able to prove that you are indeed operating a business legitimately, that you've kept everything separately, so there's no reason for them to look at your car, look at your house, or anything that's part of the personal assets, okay? That gives, that helps minimize that. That's one of the reasons why you get an LLC. Not only that, it helps keep your bookkeeping clean, having everything coming straight out of the business and nothing coming out of the personal, okay? So not commingling the funds is really huge when you're running your business, all right? Now, talk about taxes. Talk about taxes, right? When you have a business, all right, whether or not you have an LLC, whether or not you have a DBA, or whatever you are, okay, you want to make sure that you pay quarterly tax payments, or know whether or not you should pay them, okay? And a lot of that has to deal with your bookkeeping, which we'll talk about later. But if you're generating income in your business, you no longer have the perks. What I would say, the perks of being a W-2 employee is that you have your federal taxes already, or state taxes already taken out of your paycheck. The IRS knows what you're gonna make on December 27th, and so it's already pre-calculated based off what exemptions you take or whatever you put down on your W-4 form. It's already predetermined. What taxes should be taken out based off of that income. When it comes to running a business, it's not as clean cut, okay? So what happens is you have to be able to manage what's coming in, coming out. You have to be able to manage that, and you have to let the IRS know, okay, based off of this amount that I've made and expenses I've had coming out, this is the amount I should pay for taxes, which is why it's an estimate. It's an estimate of what you believe that you should pay for that particular month or quarter, or depending on how you want to go ahead and pay it. There's quarterly tax payments because you pay by those due dates of the quarter. But if you feel more comfortable paying on a monthly basis because you just want the money out of sight, out of mind, then you're free to do so. I do recommend that you get a IRS account to make it easier for you to make those tax payments, and you keep track of all the payments that you made. All right. Now, when you have a business, a lot of people get confused on whether or not they should add their business to their tax return. And a lot of that comes from, I didn't make that much, so I don't think I should have to put it on there. Or I didn't get a tax form, so I don't think I should put my business, I should file my business. And all of that is false information. If you are indeed running a business, okay, you're generating income, you have expenses that you're trying to take as tax write-offs, you definitely want to go ahead and add that business with your tax return. Mostly it's going to be on a Schedule C if you're not a corporation of some sort or in a partnership. So you want to make sure that you know exactly what you got coming in, what you got coming out, so that you know what you can put on that tax return, okay? Do not file a tax return because you don't have your things together, because you didn't know you were supposed to. If you are in business, then you're supposed to, okay? Just simple as that. If you're claiming on Instagram or everywhere else that you have a business, you're telling your friends that you have a business and you're making money, you're in business and you have to and you should file your taxes, okay? Now, when it comes to the certain type of things that you're doing in your business, you want to make sure that you're following your state laws and rules regarding the type of taxes that you should be filing and paying as well, because one of the things that people miss out on or they forget about is that some things are considered taxable, okay? So you may need a sales tax permit, okay? Not everybody needs a sales tax permit. General rule is that if you are for sure selling anything that's physical that people can touch, they can taste, that is taxable, okay? So you have to have a sales tax permit with your state, and you have to file a sales tax returns with your state. That has nothing to do on the federal level, it's on the state level. If you have digital products, okay, regardless of what kind of profession you're in, if you sell digital products, you now have to have a sales tax permit for those digital products. For example, as a tax professional in Texas, I don't have to have a sales tax permit for tax services and bookkeeping services. However, if I begin to sell taxable things, such as I do sell digital downloads, I sell online course that's self-paced, is automated, those things are taxable. And so because I have taxable things within a non-taxable entity per se, I do have to keep track of the things that I have to pay sales tax on so that I can remit those to the state. So you have to be mindful of that and know what your state requires. And all of this information is on your state website. And your state website will also tell you if the type of business you have. And I'm just speaking in general. This is like a generalized video, not specific to a target market, like a target audience or anything. But if you have a certain type of business that does certain things, like for example, if you're a photographer, like in Texas, for example, photographers, videographers, a whole bunch of, it's a long list of people, like certain type of professions, you just have to have a sales tax permit regardless. Other professionals like myself, you don't have to have a sales tax permit. However, if you do things that require you to have one, then you fall in that category. Just for the things that are considered taxable. Not everything, not everything all of a sudden has to have a sales tax permit or sales tax to it. Just the things that is associated with that sales tax. So I hope that makes sense. I did a couple videos on sales tax returns and sales tax permits a couple months ago. So once I finish this live, I'll link that video in the comments. So if that's something that applies to you, you can go back and watch that video. Okay. And then we talked about tax deductions. All right. Everybody's favorite. What can I write off as a business? What do I qualify for? What kind of tax deductions? And so the tax deduction really goes along with what's ordinary and necessary for your particular profession, okay? You can't just write off everything that everybody's saying on TikTok, okay? Not everything is ordinary and necessary for your business. For example, if I want to buy shampoo and conditioner, I can't take that as a write-off in my tax business, but in my natural hair business where I'm an influencer and I'm doing videos showcasing this product, and then I post an affiliate link so you can buy that product, that is a tax deduction for that particular business because that was ordinary and necessary in order for me to do that. And so you have, like I said, you have to look at what's ordinary and necessary for you to do the work in hand. And not only that, what is generally accepted, what's generally accepted among that profession, okay? In the natural hair community, as an influencer, that's generally accepted to buy shampoos, conditioners. That is something that everybody in that profession is generally doing when it comes to that. Everybody is not doing that when it comes to the tax business, okay? So in the business that you have, you want to look at what is generalized, what are people generally doing or have as a business expense that's not, that can't be disputed, so to speak, for example, because there's evidence to show that majority of all tax professionals are doing X, Y, Z, or whatever your profession is, okay? So you want to look at that, what's ordinary and necessary. Also, I did a couple lives on business travel, on tax deductions regarding travel, regarding car expenses, car deductions. And when it comes to travel, you just want to be mindful, making sure that the travel you're doing is associated with business, okay? There's different types of ways to write off business travel, because if you're not doing a business travel 100% for the business, then it's not a 100% deduction. Only the part associated with the business is a business deduction. The rest is just personal, okay? And not only that, when it comes to car, the same thing. So if you're tracking your mileage, hey Erica, if you're tracking your mileage, not everything regarding your mileage can be deducted. It has to be specifically for the business activity. So if you're just going to the grocery store, that's not deductible. However, if you go to the grocery store, because at the grocery store they have office supplies that you need for your business, now you can take that grocery store trip as a business deduction because you went there to get some paper, some pens, or whatever it is. Make it make sense in your head if you're going to try to take, business mileage. And that goes for any kind of business mileage, whether, going to the restaurant, to have a meal with someone. Make sure it's a business, make sure business is involved, okay? So you want to make sure of all of that. And I also talked about home office deduction, did a whole live on that. I also linked that in the comments. Whenever I finish this live, I'll go back and find that video for y'all with the home office deduction, okay? This is a huge deduction. A lot of people will be taking that deduction this year because a lot of people still were working from home and didn't have an office space, or wasn't their primary source of working in the office. So home office deduction, okay? If you have an exclusive area or space that's not the dining room or kitchen that you use specifically for your business, you can take that space, expenses associated with the space, depending on what's, it's two different ways to write off a home office deduction. And I said I did do a live on that. I'll just touch on it briefly. You can take the square footage of that space and have that as a deduction. If taking all the actual expenses of your home and everything associated with that space, if that's a bigger deduction for you, then you can do that. And I do have a home office organizer that I'll link for y'all too, so you can know exactly what it is that you need to track so that you can get the full amount of those home office deductions, because that's going to be huge. That's going to save a lot of people on taxes. I saved one of my clients $4,000. She got it was actually $4,002 worth of a tax deduction using a home office deduction. So that's going to be huge this year. So you want to make sure that you definitely get that home office organizer so you can know exactly what you need to take, keep track of for that home office deduction. And I think, so we talked about starting a business. We talked about operating a business, talked about taxes, talked about tax deductions. And then we're at the end of the year. So I talked to you about preparing for the tax season, right? Knowing what you need to take, knowing what documents you need to have in order to file your taxes. So everything that's associated with money, think of it like this. Everything that's associated with money is a taxable or a non-taxable event, okay? So if you're generating income, that's a taxable event. Now, if you're expending money, that's a taxable event, okay? So think of it like this. If you are receiving money from a retirement, from your business, from your employer, all of that is taxable events. All of those are associated with tax forms. 1099-Rs for retirement. So if you withdrew from retirement, in regards to a business, if you're an independent contractor, you're going to get a 1099 NEC depending on what you made. There was a big fiasco with the IRS. Everybody's supposed to be receiving those 1099Ks, but we know that you're not unless you generated over the $20,000 mark in over 200 transactions, which is really hard for most people. Most people don't generate that much because they have all of their income divvied up amongst different payment processing systems. So most people won't receive those 1099s. You may receive 1099Ks. You may receive a 1099 miscellaneous depending on what kind of activity we're doing. So if you're a content creator, YouTube, Facebook, TikTok, they're going to give you a 1099 miscellaneous. And I forget the box number off the top of my head, but it's going to be like royalties or something like that is where they're going to put that income at. So you will be receiving those 1099 miscellaneous, though. That's what you will receive if you venture out into the content creator world. Also, in regards to the deductions, knowing what kind of things you need to keep track of. I talked about the business mileage, so keeping track of your business mileage so you can take that deduction. Home office deduction, keeping track of all of that. And also your expenses related to your business. Everything that you spend for your business, keeping track of that. Now, if you haven't noticed like the theme of keeping track of everything, what does that mean? Keeping track of everything, knowing exactly what's coming in your business, knowing exactly what's coming out. All of that all ties into bookkeeping, okay? I talk about bookkeeping, almost every day, okay? Because bookkeeping is relevant and prevalent every day, okay? If you're operating a business, knowing what comes in, knowing what comes out, that's part of bookkeeping, okay? So having good and proper bookkeeping in place, good business organization, that helps you know exactly what to put on the tax return, what your tax professional should put on your tax return, if you are properly keeping your records. If you're not properly keeping your records, then how you're supposed to know what business expenses you have. Yes, you can go through all of your bank statements, but who has time to go through 12 months of bank statements? Who has time to do that? Who has time to go through 12 months of receipts? Nobody has time to do that, okay? And if someone has time to do that, trust me, it comes with a price tag. So having your bookkeeping in place from the very beginning, even now, starting now, still not too late, okay? Still not too late. Still have time to get your bookkeeping in place, to get your whole year caught up from January to December, depending on when you started your business, okay? I'm not sure when you started your business, but whenever you started it, having your business bookkeeping in place is going to save you a lot of time, and it's definitely going to save you a lot of money, because depending on what tax professional you go to, they will add tax when it comes to that bookkeeping fee, okay? So if you have any questions about anything I talked about today, I'll link all the videos that I've mentioned, that some of the live highlights. I'll link it in the comments when I get a chance today. Again, we talked about business, starting your LLC, getting that EIN, business bank account, operating your business without commingling your funds with your personal, making sure, oh, you know what, I didn't even mention this, but paying yourself. A lot of people get confused about paying themselves. If you just have an LLC or a sole proprietor, you do not need to put yourself on payroll. You do a simple transfer from your business to your personal account. I did talk about that in one of my lives. Paying quarterly taxes, okay? You don't want to have a huge tax bill, okay, comes this spring when the tax season comes. And what helps you not have that huge tax bill is when you are paying your quarterly taxes, okay? So pay your quarterly taxes, being compliant with your state regarding operating your business, whether or not you get a sales tax permit or any other type of permits or licenses. That's really important. Making sure you add your business with your tax, adding it or filing your business on your tax return. Especially in this day and age, everybody has, they want to get a house, they want to level up, but you can't level up if you're not putting your business on the tax return. They require you to have 2 years, and if you miss a year of not putting your business on your taxes, then you just lucked out, okay? You missed out on the opportunity. Also, tax deductions. Business travel is one of the things I talked about this year, as well as home office deduction, and anything that's ordinary and necessary for your particular profession and what's generalized for that profession. What are people generally spending or in their business as a tax professional, as a counselor, or whatever it is that you are. What are people generally spending as an expense, so that the expenses that you're taking in your business are not disputed. When it comes to tax season, which we're moving into, preparing for tax season, know exactly what tax documents that you're going to have. Everything associated with a dollar sign is a taxable event, okay, mostly. There are non-taxable events, but for the most part, everything associated with a dollar sign is a taxable event, which means there's a tax form associated with it. So any kind of income that you're receiving, that's a taxable event, okay? Whether it's from a retirement standpoint, a stock standpoint, everything, your business income, your W-2 employee income, all of those are considered taxable events, which are associated with tax forms, and especially with the expenses, those are taxable events as well. So if you're contributing to if you contribute to retirement, that's a taxable event as well. So you want to be mindful of all of that. And like I said, everything all boils down to making sure that you have everything organized, tight and right for tax season, and tight and right just for you in general as a business owner. Having your bookkeeping in place is what's most important. Knowing exactly what your profit is, your net profit is, knowing exactly what your income is, knowing exactly the type of expenses that you have, where majority of your money is going. That's how you know that with bookkeeping, okay? So that's what I have for Tax Tip Tuesday, a whole highlight. I don't know how long I've been talking. A whole highlight of 2022 for the most part of what I talked about this year, and I'm looking forward to next year. Tax Tip Tuesday, I'm going to start it off with talking about business again from the very beginning. So starting talking about business again. So if you're someone who is in need of a tax consult, you get a bookkeeping consult or a business consult, definitely schedule a consult with me so that you can get on the right track, okay? You want to end this year right and start the year right, okay? And in order to do that, you need to have professional guidance if you are not aware of everything of how to run a business, taxes, and bookkeeping, okay? So that's all I have for Tax Tip Tuesday today, and I will see y'all in the next one, and Happy New Year.